first rates are in. The Nifty is up around 16 points.
We're at the high point of the day. This is turning out to be a very good session. And once again, the Nifty is trying to get towards that 16,000 mark.
The high is 16,000, 2 points above that, I think. And low is 15,800. Again, 1 or 2 points above or below that. So a 200-point range is what we have. And the broader market action has been very strong. Phenomenal day. I'll say that. The Nifty is ending at the highest point of the day, 200 points higher.
CNBC-TV18's Fire Safe Studio, powered by Century Ply, now with firewall technology.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. Stock markets close at 1-month highs led by consumption stocks. Sensex gains over 600 points. Nifty gains nearly 200 points. Crude oil prices crashed to near 2-month lows on recession fears. NYMEX drops below $100 a barrel before staging a mild rebound. Metal prices are not spared either. Copper and aluminium drop to levels not seen in over a year, while gold falls to 7-month lows. Bajaj Finance gains after it reports strong growth in customer additions and total loans in the June quarter. M&M tells CNBC-TV18 the new Scorpio and SUV 700 bookings should keep SUV sales ticking up, even as a delayed monsoon will see tractor sales pick up in the month of July. Macrotech developers rallies after a good first quarter business update, which indicates a reduction in debt. FMCG stocks such as Marico, Dabur, Godrej Consumer also soar on strong business updates. All right, well, those are all of the top stories that we're tracking this evening, but here's a lineup of what we have in store for you. In Market Opinion, we have comments coming in from market veteran Madhu Kela, founder of MK Ventures, and the big corporate voice on the show today is M&M's Rajesh Jejurikar. All right, let's get to the first story then. Bulls were in charge on Dalal Street with markets ending at 1-month highs. The Nifty and the Sensex soared over 1% and were led higher by consumption stocks. 40 out of 50 Nifty stocks ended in the green, with 20 of them rallying over 2%. Anuj is here with the details on today's market action.
Well, good day for the bulls. I would say excellent day for the bulls, a day in which they are clearly now sniffing breakout. The market latched on to the big decline in crude prices and other commodity prices in general, but crude in particular, and that was the theme which played out. There was big rally across the indices, but the profile of stocks is telling you what the market was latching on to. The banks and financials led the rally, and they were joined by consumption names. The FMCG names, the auto index. In fact, the FMCG and auto index both very close to 52-week high. Just take a look at the top gainers of today's trade. Britannia, Lever, Godrej Consumer, the auto names, Eicher, Hero, Maruti, the financials, Bajaj Finance, Kotak, HDFC Bank. What's common amidst all of these names? All of them are either domestic consumption plays or those financing these plays. This is where the big bull market had started 4 or 5 years back. I'm not saying we're getting there, but the signs are there. In terms of what next, well, clearly, the screen is indicating that some kind of a breakout might be near. If there's a gap up tomorrow above 16,000, that could force some short covering because it's expiry as well. The joker in the pack, what happens to the US market? That's something which has always been unpredictable. But for now, it was a good day for bulls.
Okay, most definitely a good day for the bulls. Thanks, Anuj, for that. In Market Opinion, then, we have market veteran Madhu Kela, who said that it was a good time for investors to build a portfolio. He's also betting big on PSU banks.
Broader market correction has been far more steeper than what is visible. So, and because of the macro only, these corrections has happened. That's what I'm saying. And now this is a chance to build what you want to buy over the next 3-4 months till the time this noise settles. Because once the noise settles and once everyone knows that the macro is under control, then obviously these prices will not stay. I have far more conviction to invest today than what I had 6 months back. In the last 8 years, there has been unprecedented amount of cleanup which has happened from the banking sector. The PSU banks have made provisions of 12.9 lakh crores. When we discuss with Canara Bank and Karur Vysya Bank, you will hear this. They are beating their own guidance in credit cost.
Okay, well, let's get in some more opinion then. US will not go into recession as unemployment is low and labor market is strong. That's the word coming in from Mark Matthews, Bank Julius Baer and Company. Meanwhile, he expects to see strong growth in India for the next 3 years.
There's not much they can do. If we do go into a mild global recession, it will definitely go back down to that level or lower, which is not impossible. I mean, the U.S., I struggle to understand how there could be a recession when unemployment is as low as it is and the labor market is as strong as it is, because historically you never had recessions in America without a high unemployment rate. And it just doesn't seem possible given the state of the labor market there. So it's an extremely unusual set of circumstances that we're facing coming out of COVID with the war in Ukraine, et cetera. But sorry, long-winded answer to your question. I would love to buy India lower, but I don't really think it will go much lower. And I think it's a good level here. I would be a buyer of it here, actually, yes. I think there is a strong economic cycle. Ironically, it probably started about a year ago, just when the Delta wave started. But India has the benefit of having had subpar economic growth for the last decade due to the NPAs with the banks and the reforms, which were an excellent building block for a stronger economy, but really dragged the small and medium-sized enterprises down. It took a while for them to absorb them. That's in the rearview mirror. So I think that there's lots of catch-up to be done coming out of a decade with subpar growth. And I would look forward to at least 3, but more years of strong economic growth in India if the oil price can stay, at about $100 a barrel or so.
Okay, so that's the opinion. Well, on to the second headline this evening. It's all about the sell-off across commodity markets. Crude oil prices have crashed and precious metal prices are on a rapid decline as well. From gold and silver to steel and aluminium, metals have fallen to multi-month lows amid fears of a global recession. Manisha Gupta is here to explain what's happening in the commodity market.
Oh, absolutely. Well, the recession fears, as you mentioned, is a key reason. We are also seeing a flight of capital to the US dollar and treasury notes as investors look for safe havens. The European Central Bank is set to join others in hiking rates this month itself. The COVID fears continue to linger, especially in China, with Shanghai calling for mass testing in several districts, including Shanghai. The job growth in the United States is likely to have slowed as well. All this means that crude oil prices, the kind of decline that we've seen, we saw 9% of a decline overnight, hitting the lowest levels in 2 months. The crude oil prices now are down 12% on a month-on-month basis. There are concerns over demand and fears that the supply situation is being overlooked. Remember, Citi has predicted crude oil prices to fall to $65 per barrel by the end of this year. And it's not just the crude oil. The copper prices are trading at a 16-month lows, aluminum prices at near 1-year lows, steel is at a 10-month lows, zinc trading at a 9-month lows, and you have iron ore prices trading at a 6-month lows as well. The precious metals also were not spared either. Gold prices are trading at the lowest levels in nearly 7 months. We have seen $60 of a decline in gold in last 24 hours. Silver prices trading at the lowest in last 2 years. So it's a rout across commodities and there is simply no place to hide.
Okay, all right, Manisha, thanks very much for that. Well, on to the third headline this evening. Bajaj Finance rallied over 4% on the back of its first quarterly update, which showed a growth in customer additions and total loans. So what is the bull versus bear case for the stock? Abhishek Kothari is here with the details.
Now we have a bull versus bear scenario in terms of brokerages on Bajaj Finance. On the bull side, we have Morgan Stanley, which has an outperformance rating on Bajaj Finance and a target price of 8,000 per share. They say that, the core AUM growth has been healthy and the customer acquisition has been the highest ever that Bajaj Finance has seen. So customer franchise grew to about 6 crore in terms of the total number of customers, and new loans stood at 74 lakhs for the quarter gone by. On the other hand, we have a bear case scenario by CLSA, which has a sell rating on Bajaj Finance, and they have lowered the target price to about 5,000 per share from the earlier target price of 6,000 per share. They say that, the growth has slowed down from pre-COVID levels. Just to alert our viewers, now the growth rate is in single digits in terms of Q1 versus Q4 from the earlier levels or pre-COVID levels of between 10% to 14%. AUM growth will sustainably slow down given the fact that, it has a large customer base, so they expect AUM growth to slow down going ahead. Back to you.
Okay, all right, Abhishek, thanks very much for that. Well, let's move on. Then in other news, aviation regulator DGCA has issued a show cause notice to SpiceJet asking it to explain why action shouldn't be taken against the airline for the multiple incidents reported in the last 18 days. The DGCA said SpiceJet has failed to establish a safe, efficient and reliable air service. Aviation Minister Jyotiraditya Scindia says passenger safety is paramount. Anu Sharma joins in with the details.
By the Director General of Civil Aviation, the Civil Aviation Regulator has served a show-cause notice to low-cost carrier SpiceJet for the incidents, the spell of incidents which have been reported. 8 such incidents have been reported over the last 2 months, 5 of which have been reported over the last 15 days. Now, in the show-cause notice, the regulator has said that there has been a poor internal safety oversight as well as inadequate maintenance actions which have been undertaken at SpiceJet, leading to degraded safety margins. The regulator has also pointed out to a financial assessment done in September 2021, whereby it is clear that SpiceJet is on cash and carry mode. The payments to suppliers and vendors are delayed, leading to shortage of spare parts. All of this has resulted in such incidents whereby we have seen 8 such incidents almost due to technical glitches, due to system error. Now, as a result of which, DGCA has told SpiceJet that it has failed to show an efficient, reliable air service, and the accountable manager should now show cause as to why action should not be taken against the airline within the next 3 weeks. The Civil Aviation Minister has also tweeted on this incident, and he has said that passenger safety is paramount and even the smallest error hindering safety will be thoroughly investigated and course corrected. Back to you.
Okay, all right, Anu, thanks very much for that. But in important news, in a bid to arrest the fall in the Indian rupee, the Reserve Bank of India has announced new measures to enhance forex inflows. Lata Venkatesh is here with more.
The Reserve Bank has announced a slew of measures which should improve FX flows into the country. The first of these is, this is an incentive to banks to have more foreign deposits. They have said that whatever they collect through FCNRB deposits, which is foreign currency non-resident deposits, they do not have to keep SLR and CRR on those. So it becomes lucrative for banks to offer a higher interest rate and attract non-resident funds into these areas. That would improve dollar flow. The next thing they've done is, in place of the LIBOR, you have something called now the overnight alternative reference rate, because the LIBOR is no more in use. All interest rate that banks pay on FCNR deposits is linked to this ARR, which is, for 1 to 3 years, you can pay an interest rate which is not more than 250 basis points over the ARR. That limit has been relaxed. Now, banks will be allowed to pay higher interest rate to attract foreign deposits. In a third step, if foreign investments in debt, the foreign investment in debt is allowed through the what you call the FAR route, the fully accessible route, where foreigners can invest in 5-year, 10-year paper, to any extent without any limit. They have added the 7-year and the 14-year tenor paper to that list, so foreigners can now invest in more kinds of debt to in an unlimited extent, which is what foreigners would normally like. They wouldn't want those limits. Likewise, they were not allowed to invest in corporate debt under 1 year. They could invest only in debt over 1 year for corporates. Now, for a temporary period up to October 31st, they're allowed to invest in commercial paper, CDs, etc., which is really short-term paper. Again, that might attract FPIs into debt. And further, they have allowed, banks to borrow abroad. Until now, they could borrow abroad, but they had to lend it only for external purposes. There was a limited list. Now that list has been expanded, and even for external commercial borrowings, there has been relaxations. The Reserve Bank goes on to say that actually India's macros are good, and the rupee depreciation is actually in the middle range of depreciation. I mean, if you took all the emerging market currencies, and even for that matter, developed market currencies, India is not the worst performer. It's actually in the middle. So it's not a serious case. Indian macros are strong, and it is only geopolitical issues that are creating this tension in the FX market. Nevertheless, these measures have been announced, and chances are that this should improve the flow of foreign dollars and other foreign currencies into the Indian market, and that will help bridge the current account deficit.
Okay, all right, Lata. Thanks very much for that. So some relief coming in for the rupee, which has closed above 79. Time for a break now, but stay tuned. Once we're back, M&M is in the fast lane. We'll tell you why just after this short break.